Markets are selling off. Things are pretty nasty out there. I'm seeing a lot of pain and even blaming out there on X and throughout the internet. But I also saw this image today that spoke to me, and it couldn't be more true. You have to learn to make your own market decisions. Blindly following anybody into a trade sends a signal to your subconscious mind that you're not in control and you don't know what you're doing. I'm going to make this black and white for you. If you don't have data showing that you have an edge in the market, meaning a model that outperforms the market, and proof of your ability to execute that model, stop pushing buttons until you do. The market owes you nothing. This is not a game. There are no shortcuts. Call rooms are not an edge, and these people are not going to save you, myself included. You are responsible for yourself. The only chance you have is mechanical execution of a model with proven edge, paired with proper risk management. On top of that, you must learn market breadth. There were signals under the hood for weeks, even months, that were suggesting this sell-off was coming. And the current weakness in the market was foreseeable. There were clear signals. I've been covering them for weeks on this channel. And if you're spending time, or even worse, money, on chasing calls instead of learning how to spot these signals, then you're not going to make it until you do, period. If you want to significantly increase your chances at success in these markets, then you need a model that outperforms the market, you need proper risk management, and you need to learn to read market breadth. My bootcamp is designed to make you a self-reliant trader. Come work with me directly, one-on-one for 60 days. The markets are a brutal teacher. If you're struggling, stop. You can keep setting your money on fire, or you can hire a coach. You need a plan, and I can help you. So with that, what's up, swing traders? Snacks here. We're going to jump in and do our watch list for Tuesday, November 18th, 2025. Starting, as we always do, with a little bit of market breadth. This is going to be a slight mirroring of our session yesterday. We've got these different zones here, and we've also got a blackout where I will not be adding any new positions before the NVDA earnings release that comes after hours on Wednesday. It will move the market, and you just simply do not have an edge positioning beforehand. You don't know the reaction to these earnings, and with NVIDIA making up more than 8% of the market, and then when you couple the other semiconductors that will move along with it, it's going to move the market, and you do not know. I don't care what you think you know. You don't know the market reaction. The last NVIDIA earnings, they had a quadruple beat, you could say. They had earnings beat, revenue beat, raised guidance, and announced a share buyback, and they sold off for a few weeks, okay? So you don't know the reaction, and positioning before that is not trading with an edge, you're gambling. So we are pumping the brakes, and what we're doing is we are building scenarios, as we always do. We don't like to be overly predictive. We like to build an if this then that set of scenarios, and it's what we've been doing here over the weekend, and yesterday's watch list really detailed it, and I'll show the pathing that I'm looking for after the report, the possible trades or positioning that I will look to take based off of where the SPY goes. So if we break down, okay, I'll look for a little push up, and then I want to short this move, okay? It looks like in pre-market and in futures, we are already breaking this level. So if we push down, we get a little push up maybe before the NVIDIA earnings. And if the reaction is bad, I expect we go down. I'm going to short that right there. And the same thing goes to the upside. If we pop up, I want to invalidate this lower high, get up above it, pull back a little bit, and then I would buy that move, okay? So those are the two paths that I'm looking to take, and I think it will be very dependent on NVIDIA's earnings. This whole thing could just be a shakeout. If we get a good report, then we'll have to, at that point, design a third path, right? If this does end up being a bear trap, if we're rolling over into the report, okay, and we get a pop up, then we're gonna want to be going long, maybe somewhere in this range right there, okay? But this is the no trade zone, and that will stand no matter. And we're gonna look at RSP here. We're breaking down. This is a nasty look. We've got IWM. We're breaking down. This is a nasty look. We've got the VIX spiking. We've got the Qs breaking down. We've got crypto breaking down. The only thing that isn't breaking down is my idea for the Indian stock market, holding up quite well, looking to do one of my 5 continuation patterns is a box breakout, which this is currently going sideways for at least 6 months is the criteria. This has been over 15 months at this point. We're looking for it to break out, pull back, hold, and we want to buy that move. So we will keep an eye on it. And in the meantime, the only thing that we can do is wait for the US markets. continue to build our plan and understand our levels and our pathing going forward, okay? So with that, we want to begin to identify strength in sectors. What we had again yesterday was another show of strength in the healthcare space. Okay, I don't want to just say healthcare because we've got pharmaceuticals here looking good. We have medical devices, we have healthcare. All of these sectors remain strong, okay, while the rest of the market is selling off. So you want to identify strength. We've also got biotech, utilities, and energy all remaining strong as well. Energy has not yet cleared range. We do want to see that happen, but it's holding up decent in comparison to the market. Okay, so we've identified these sectors. I will share some lists below. I've got a natural gas as another trade idea. I will share the link to this watch list below. Natural gas is holding up, showing some relative strength. You can look at some of these tickers here. All right, there is an argument that natural gas is going to be a key element in the infrastructure of AI, right? How are we going to power all of this? So certainly something worth keeping an eye on. I believe that sector could break out. We've got a list of shorts, guys. I just shorted Celsius the other day. Probably going to get over 100% on this trade. I did say in chat, guys, my original entry was quite tight and that I may give it a little bit of room. Obviously I have, so I'll stretch this out as well. We're just gonna have to see the market action today, but I may just sell this at open. It should be around 80 to 100% on these contracts. I shorted Budweiser the other day. I had to do it, right? This is a narrative play that I have been talking about for a while with you guys. There are studies showing that the alcohol consumption in America is at all-time lows, so that is sort of the trade thesis. We got this big pop-up the other day. I just didn't trust it. It was pretty small, quarter size, but same thing here. I'll probably just go ahead and clear this out and wait for a more ideal entry below the 50 for that narrative play idea, and maybe size up slightly larger than 0.25%. Got SoFi. I'm trying to give this a little bit of room here, but with, you can see where my initial stop was, but my hard line in the sand is the swing low. So we'll go ahead and bring that down. That's my line in the sand. It does look like it's going to get hit, to be completely honest. I've got a decent amount of time, and it was quarter size as well. I'm just trying to give it a little bit of flexibility, but frankly, the XLF financial sector, this is a dirty look. So probably going to need to cut this guy today. I don't plan, even though it's quarter size, I do not plan on averaging down. I may want to give it until, because it's quarter size and I took a few more wins this week, great gold trade last week. I've got a bit of a buffer. I'm certainly not getting hurt too much in this market action. I'm compounding some smaller gains into surviving, really, right? Because obviously I'm getting some pullback on my longer term positions, but I'm not really seeing much drawdown at all at this point. Obviously I was at 209% on the year, and I'm down into 170 on the year, in the 170s. So, I've had a slight bit of drawdown, but we've certainly flattened that out. And as some of those longer term positions like BM&R, I've not sold that, right? And I'm down. I think my average was 50 on that guy, 51. So I'm down on that. I took some lithium starters, right? So I am taking some drawdown on other positions, but by doing some strategic shorts that I've been doing over the last week or so, we've really flattened things out. And I believe that once we get the clarity of the move coming out of this, then we're going to be able to lean in one way or the other, size up, okay, and start compounding those gains again. So I'm controlling my risk with size. And, I'm still taking winners as the market does pull back. And again, I've flattened out that drawdown in my year-to-date equity curve. So hanging out in the 170s, still kind of as we have been for a couple of weeks now. But again, I think that once we get clarity coming out of the NVDA event, then it surely will be an event, I think. But once we get some clarity coming out of that, we can very likely size back up if we have follow through, if we have confirmation in one last time, one of these moves in the market, okay? Which one of these guys are we going to buy? We're either doing calls or we're doing puts. Guys, in Bootcamp, if you're nervous about puts, we'll go ahead and do a session on that. We've got a live session tomorrow night, but we're gonna do another session on puts. I don't want you guys being overly worried about taking shorts, right? It's the same thing. It's mechanical, if this then that. It's all of the same models. If you would like, you can inverse your charts, okay? Invert scale. It makes your charts, when you're taking shorts, look like you're taking longs, it is still all the same qualifiers. We're still doing triple R's, but we may need to begin doing it to the downside if the market does break down here. And I believe we get our answer this week. Thursday should be a volatile day, and we'll have to see which way things are heading then. So look, guys, I want you to take a look in the mirror. If you're taking losses, first of all, ask yourself, why are you even trading right now? Okay, if you're getting hurt, why are you trading right now? Why are you taking positions? Are you a day trader? All right. If you are, how's that going? Maybe you shouldn't even be doing day trading. Most people cannot day trade effectively over time. It's just a fact. Okay, you're literally battling the algorithms every single day. Okay, you're fighting Jane Street Capital every day, among many others. Like, dude, they have multi-floor server rooms built to fuck you up. Okay, it is that simple. So if you're struggling and you're day trading and you think a prop firm is your shortcut, and you're very, very likely spinning your tires, and you need to stop. It just doesn't work for most people. So consider swing trading. And if you're swing trading right now in this chop, you're probably being emotional. You're probably gambling, whatever it may be. There is no edge. We are trend traders when you're a swing trader. Okay. Yeah, maybe you're a speculator, but most swing trading models are trend following. We are not in a trend, my friends. All right. This is a trend. This is sideways chop, consolidation, whatever you want to call it. It looks quite toppy, whatever it may be, but we are not in a trend. We are not getting follow through either direction. Take a look this here on the ES as you see this wedge forming, right? Look at this. We're not making higher highs. We're not making lower lows. Well, lower low did just start, okay? But, until today, we are not doing anything like a trend, right? We are making lower highs, and we did today just make our first lower low. So, maybe we just initiated the trend, but again, I'm not going to redraw it. Let's let it push down, pull back up, make another lower high, and then push down, and you can short that move right there, okay? We've now made a lower low. Let it sell off a little bit, push up, and if it rolls again, take that short, okay? That is a high probability setup. All right, and then you can really do it down below this level. That would mean that NVDA miss and the market's going to get nasty is likely what that would look like. Same thing, guys, to the upside. Okay, but you need to make sure that you are applying edge. Otherwise, you're playing a game, and this is not a game. Stop pressing buttons. Okay, work within your edge. And do you even have one? Do you have a model that to outperform the market's statistical significance, okay, over time? If I do this over time, if I execute, what is my winning percentage, okay? If it's above 50 in a 2R, it's a money printer, all right? So now it becomes the 3 M's, as I'm beginning to say. Is it the model? Well, we just covered that, okay? Is it me? So are you executing the model? Are you doing it mechanically with conviction? It's if this and that triggers. Are you pulling the trigger? Are you managing your risk properly? That also falls within the second M, the me M. And the third is the market. Are you aligning your edge with proper timing in the market? Again, as I said, for swing traders, if you're trading right now and have been heavily in the last couple of weeks, the answer is very likely no, okay? You're forcing it. So wait until we reestablish a trend and then fire off your trend continuation model, okay? And then do it mechanically and pull the trigger without fear, all right? If you can do those 3 things, then that is your first step towards outperforming the market. The market has a brutal way of making us do shit and press buttons and act outside of our plan. Do you have a plan? All right. And if you don't, guys, again, one last time, consider a coach. Okay. I don't care who it is, obviously vet them in some way, but do consider a coach. The markets are such a brutal teacher. Don't lose all your damn money. Okay. Get a coach, get serious about this, learn a model, and then work on yourself so that you execute that model without hesitation, without deviating, and manage your risk properly. That is the only way that you can sustain an edge over these markets. So guys, we just have to keep waiting. Bootcamp. See you guys live tomorrow for our Why Are We Trading session. And as I said, we'll also be doing a short session very soon. All right, that's it for today, guys. Stay safe, manage your risks. I'll see you soon.